get a good idea what's happening. But I talked yesterday, right, about the UPN. We were sitting right up here, right up on top of the reverse wave trend. Me and Yasha were sitting there talking. It's a good thing to dump down below it, even the power mean band, and then pull right back up in it. But of course, we dumped right back out. But as I just showed, it did create some bull div. Did create some bull div. Who really knows? The market's just in a state of fuckness right now. It'd be great to revisit this wick all weekend, but we haven't had any weekend moves in so long. That's when it's going to be perfect time, and you just have a massive move on the weekend when nobody's expecting it. I mean, you can go back. We haven't had any major moves at all that I can even remember. It's been a long time. The weekly candle was looking great. Not any longer. What I want to take a peek at too with the distribution is, but obviously you can see the 95.4 plus distribution range to the downside is definitely getting support, finding support there. Finding support. I mean, the probabilities are to go back up and test the 68.3 right here. All right, 68.3% chance for this price action on these projections, go back up, test. And if we're doing the projection from the 48K high we just had, it's a little higher. It's a little higher. Hell, the downside's way up there, over 60. The recent, it's that number I've been throwing out, right around 40, 41. We'll see. But to get below these areas, you just gotta work with the probabilities. There's only a 4.6% chance we dump down below here. Can it happen? Yeah. Bitcoin will take that 4.6% and shove it right up your bum. We all know that. We all know that very well. Now that I'm here, God, Solana at $38. My goodness gracious. Let's see. So I've got to take PB2. Let's pull that back 130. There we go. And pull this in 1 to 9. Just want to get these correct before we take a peek at these. Yeah, we're below. So what we were just looking at on Bitcoin. Solana, on the other hand, this week has dropped below both of them. It'll be interesting to see. Oh, I mean, Solana has almost ran the first standard deviation range. I mean, it's close enough, to be honest. So did the little 1 SD shuffle there. Looking at this, there's a high probability Solana is going to pull back up here. Right? It's all about the probabilities. And right now, from both these projections, it's no bueno. No bueno. So we're working this probability where there was a 4.6% chance. Hell, the last 2 weeks it dropped out. Right? And this week finally dropped out of the that local high when Bitcoin was at 48. What was or actually, what am I talking about? Hold on. This is the 48. Yeah, that was the 48. Solana got back up to 144. This was up here to all-time high. Good times, MJ. Where the fuck's the $265 Solana? We could use that. That'd be real nice.
Yeah, tell me about it.
Yeah, Solana's definitely. Probabilities are for it to pull back up. For sure. We'll see what happens, though. Obviously, it's going to depend on Bitcoin. And traditional markets are dicking around, driving everybody nuts as well. Up, down, up, down, up, down. All right, I just wanted to see where that was on that projection. Let me reload this. There we go. Okay. Yeah, so we got the projection from the 48K high and the all-time high. I misrepresented that. That's when it threw me off and I went to Solana. So Bitcoin's looking a lot healthier. We'll see. I'll tell you what, if Bitcoin drops below here, hey guys, you never know. We could see some low numbers. There's no doubt. But obviously, here's what I'm looking for. People are talking about those numbers, and you can see these current candle distribution ranges. You're not going to get outside of these. You can go back. You might get some wicks, but usually this is why we use Laplace distribution. Right? That weekly, that was nasty. Hell, we got by the third standard deviation normal distribution. Still didn't touch a 99.7 Laplace. And even this week, right? 99.7, a tick under 21K. Tick under 21K. Depending on how this candle closes, you can see we're just these distribution levels, they're staying about the same. Let me see something. Yeah. They're not expanding very much or contracting. They've been staying pretty steady, especially the last 4 weeks, 5 weeks even. I'll tell you what, it'd be nice to have a good weekend. Just $1,000 to the top side. Close up here by the 1 SD. All right. You're going to leave this nasty weekly candle. I mean, I've seen it before, though, where it can work out next week where you'll immediately get that pump, refill that refill that wick. So we'll see. So that being said, goodness gracious. Yeah. I'm telling you, I'm still sticking to my guns. The Bitcoin bottom's in. From what I'm seeing on this weekly, man. When I'm looking at these Fishers, the log returns E-score, I want to see what happens with the entropy. We talked for, I was like, the next time we have a nice trend on the weekly, we're going to have a massive move. Could be to the downside, could be to the top side. We started trending, right? Started building to the downside. We've been losing that correlation. We've been losing the correlation to the downside. I mean, this would be prime right here to coming into this next week to run this thing up. I'm getting bored with the market. Why? Well, because I'm not even actively trading. So of course I'm going to get bored. If I was actively trading, I'd be trading on the low time frames anyway. And as Yasha likes to say, it's been the salad days. There's all kinds of money to be made. All kinds when you're trading these moves. And this week has been great. Ton of volatility. Beautiful. So it would be nice to have a good weekend because the new weekly range is going to be up here. God, we're going to be under it probably. If we move up $1,000 this weekend, we'll be okay. We might close above the weekly range, but we're gonna have to see how this plays out. Considering the way the 4-hour looks, could get interesting. Setting up. Let me see here. Yeah, there's definitely some hidden bull setting up on the returns oscillator. This Fisher's just been a train wreck on the daily lately. Last couple weeks. The bands on the daily are definitely starting to contract. We are staying up above that. It's like the 9 or the 33. Let's see. That is the 9 length variance log moving average. We got the bottom of the power mean band starting to flip a little bit. 33.6, 33.5, 38. That's going to be an area of interest next week. Do I think we're going up? I did. I'm still sticking to it. Let's see. Yeah, I'll be watching up here. I want to see this go into trend on the daily. Let's filter our way down through here. Yeah, and that's the thing too. I mean, this hidden bull on the 12-hour. I was looking at this last night, right before I went to bed. I was checking it out. It's been nice. Get price action up here. I want to see the 12-hour. That'd be nice to see the 12-hour reverse wave trend cross back up to Fisher. I mean, across down when we were as soon as we dropped from that 48K high, right? Would be nice. Hmm. Yeah, these volatility bands are still tight on the 12-hour. I mean, we definitely have a move coming. With the volatility did expand, right? Not as much as I wanted. That's for damn sure. I'm looking for that big move. At some point, it's going to come. You know how Bitcoin does it. They're going to just throw everybody into a tizzy, get them all confused. I was looking at the longs and shorts on CME earlier, and it was only what was it? I think it was like 57% longs, something like that, barely. Not too much of an imbalance at all. There's a lot of shorts out there to get their asses handed to them. Shorts have had their party. Hell, they've been having their party since the all-time high, right? Predominantly. Good moves both ways, but predominantly down. One more peek at the 4-hour before I drop. Let's see. Yeah, I like the 4-hour going into the weekend for sure. Say that right when I say that, then I drop to the 90-minute and see some hidden bear setting up. And the log return Z score is just up on the top side. Ah, it was great to wish. No, I'm just kidding. 90-minute flips quick. The 45. And right now I'm just trying to, let's see what we're gonna do going into close. I do like it because this volatility was contracting negatively correlated. So we just been floating up. Um, Heading back into randomness, losing correlation. Yeah. And overall, right about there. I need to flip this correlation line. It's on a 5 still. Or maybe it's on a 10. Let me take one more peek, and then let me pull up my pro trader chart, or I mean my pro chart. Yeah, still Spice still chilling. Hasn't broke down below this monthly. Closed above the monthly center of it, and it was finding support on the weekly. Weekly's done. Right, it's only 4 days this week. This will be real interesting going into next week. There's no doubt about it. Flow chart. Where are you? Swing. All right. Let me What are the indicators and financial name label? Bye-bye. Okay. So for IMRs. So what you got laid upon you was some goodness. This is the basis of volatility trading, right? You've got a volatility percentile and you've got a Pearson correlation. So when you're looking at the alpha volatility percentile, you're going to notice is what you really want to be looking for are breaks in correlation when volatility is expanding and contracting. What am I on? 10. What's this on down here? At 10. What are we on? A 15? Yeah. Fill this down. Boop. Oh. Okay. There we go. There we go. There we go. Because as you see right here, what's this on? Let's go actually to 5 minutes. When you're and is what I do, I have two different lengths here, right? This top one is set to a 636. The bottom one is probably a 981. Yep. But we're just going to talk about one right now. You'll once you get your feet wet, you'll be able to start looking at a couple. But when you have about, you know what, God, just for this, it might be better to put these on 10. We're having some drastic changes. You might not be able to recognize. There we go. So when volatility is flashing like this, all right, when volatility is low, there's only one thing that's going to happen. Volatility is going to expand. It can go sideways for a while, like right here, but eventually you're going to get a volatility expansion. And once that volatility expands, it's going to contract. So here's a good example right here where you've got low volatility, right? Look where the correlation breaks. As soon as you get this candle, you get a volatility expansion. Correlation is negatively correlated. The slope is heading down during an expansion. That's immediate. Look at these next three candles to the downside. If this was an expansion positively correlated, right here, price action moves to the top side. This is how volatility and correlation works. And there's a cheat sheet. There's a cheat sheet in the Discord. MJ can dig it up. Where the hell is that at? I don't even know. It tells you about different scenarios that take place with volatility that you're going to want to start to study. It's on a 4 hour. Yeah, so when you're looking at a 4 hour, right, you got a flash in volatility right here. Volatility starts to expand. It expanded one little candle, but you can see it's kind of flat. You're waiting, right? Especially when the correlation really hasn't started there's not a big move taking place. You're looking for some real expansion to start. And when it starts, you're significantly positively correlated. And so when you get that expansion in volatility and it's positively correlated, price action's moving to the top side. And this is why you have two. And so if I'm looking at the 981, look how long volatility was low. So I'm chomping at the bit. I'm waiting for this. I'm waiting for this lower length to flash. Okay, so now you got the lower length and the mid length AVP flashing. Now you're waiting. You're waiting for the expansion. And so you can see it starts to expand a little bit on the low. Look at the 981 though. It hasn't done anything. So when are you getting into this trade? Right? If you're looking on the 4 hour, when this baby starts to expand, even right here, you're all over this. This is what you're waiting for, right? Because number one, you're expanding up here, and you did have the break in correlation. And look at the next candle; they're both significantly positively correlated. Because it's how you trade low time volatility. Once you learn, you're not going to get too many bad entries, if any at all. If you do, you just got to limit your loss. Just get out of the trade. Period. The end. There's no emotional attachment. Okay, it was a bad entry. Price action dipped below my entry. I don't need a stop loss. That is my stop loss. That is my mental stop loss. Oh, price action went below my entry. I'm out. Especially when you're down here trading on the 5-minute charts. There's another trade coming right behind that one. So that's going to build P&L big time. When you're taking profit, limiting loss, and you're not emotionally attached to those trades, that's what's going to allow you to do the first two things. But that's how volatility works. And that cheat sheet, MJ will dig it up or somebody. That's how the volatility works. And then is what we've got here. This just starts to break you in on divergence between price action and returns. So if you've got a lower low right here, this is the only time you'll ever see me drawing lines on charts too, right? We're not TA artists. We're all about probabilities and divergence between price action and returns, which you're about to see here. So just like it was showing on the return oscillator on the 4-hour, this is this right here is the alpha laser returns. Pretty much that. It's just showing what the returns are doing, and look, man, going up and nailing the 3SD, boom, pulling back immediately. And there wasn't even any div there. That's why it kind of went sideways for a while. Let's see, there was the div, right? The last high, look at the high right here. Look at the returns. And so you got a higher high on price action, lower high on the DLP. That's your first warning, right? And especially when you're getting these little pops, look at the return candles. They're just nothing to them. There's nothing to them. And at the same time, you're starting to drop. You can see the return candles starting to progressively drop right up there at the top. So you're waiting for this to play out. And obviously I'm not taking entries on the 4-hour, but when I'm seeing this building, I'm like, okay, this is coming down. Just like you get a lower low here, price action. The returns had a higher low. So it immediately, boop, we're getting a little 2-4-hour pop off of this bull dip. And it's showing, like I said, if we go back over here, throw this back on the 4-hour, showing here as well. Higher low on the returns oscillator. So there's a little more of a nice slope on the laser returns, but it's definitely on both. And I'm like, look at the correlation. Look at the correlation. All right. As soon as that returns oscillator turned up, you're getting blue. You're getting freaking positive correlation for that move. It's telling you can trust the read on the returns oscillator that the price action is going to follow. Go back over here. So this starts to get you used to seeing that divergence, right? Oh, that's not the one. What you doing, Bilbo? There we go. Boop. There you go. And there you got bear div. There was bull div down here, bear div at the top. And that's what usually in the markets you will see, especially between returns and price action, that the divergence between those is literally moving the market. People always ask me why. I'm like, because there is an imbalance in the buy and the sell pressure, right? So think of it this way, where you got a couple sports teams. Let's just say American football, for instance. Offense comes out on the field. The defense is giving barely any resistance. That offense just pushes the ball right down the field, touchdown, right? 5 plays. That is a major imbalance because now the next time maybe out on the field, right? Defense didn't exert any energy at all. The offense did, though. They're just going crazy. Those 5 plays wore some people down or whatever. So the defense is going to have an advantage next time around. And that's what happens. You get this imbalance of this buy and sell pressure, and it just, boom, you'll see it break every time. I mean, you can go down on these low time frames and literally every freaking move, it's just divergence plays. Boing, 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 boing. Because people that have been here for a while, especially founders, we know that when you see that divergence, it's literally telling you the return on your investment is diminishing. Take your profit. Get the hell out of the trade. It's simple. It becomes very simple. Let's see. So yeah, great indicator to break you in on that. And then you've got the alpha trading, alpha volatility quality. And it's a great indicator. Do I use it? No. This is great for new people though, just to see the power of it. I mean, it's a good indicator. You'll see, you'll like it, especially on those low time frames. Get the MA set up right, which we don't use like traditional TAMAs. I like to use log return moving averages is what we use. So especially we go over to this chart. That's what these are, right? The ultimate power mean. It's got 5 plots, 6 plots with the bands, I think. And so 3 of the plots in the indicator are variance log moving averages at a 933 and 99 length. Then you've got reverse wave trend, reverse Fisher. Then you've got a power mean band. Yeah, it's a great tool. That's on the next package as well. It's really cool. Let's see. Yeah, it's pretty. And all you got to do, you just pop in the chat anytime. You got questions about any of these indicators, there'll definitely be people to help you. Definitely. But that's where I would focus first. Get that cheat sheet. Yep, that's great to read. Good job, MJ. That thing's awesome. Yasha is a madman. Yasha put this thing together where it's just like, holy shit. It's good to read when you're on the toilet in the morning. It's good toilet material. Might sit there for a while. Let's see. Just to see how expansions and contractions and how they are correlated, right? How they are correlated. Look at this little expansion and volatility, right? Well, it's heading and positively correlated the whole time, right? And right here is where it starts to contract a little bit, right? It's still significantly positively correlated, but it's sloping down. So you're going to get a little walk up, and that's why you see this wick right here, especially in my opinion. But then immediately you get this mass expansion. Correlation really breaks to the downside. Negative, straight down. And you'll see this. You can go through. There's many examples. This doesn't lie to you. The volatility will never lie. When you correlate the volatility to price action, it's going to give you direction 100% of the time. That's just the way it is. That is just the way it is. And then once it's time to move forward, the entropy's correlated, right? Any indicators we have that aren't directional oscillators, right? Like log return z-score, returns oscillator, the Fishers, everything else we're going to correlate, right? Because variance is not a directional indicator until you correlate it. Look at this. The variance starts to rise, and variance is nothing more than the spread of the data set around the mean of returns. Okay, so variance takes off, and it's negatively correlated by the outside pink lines. The inside pink line of the variance, it's usually white. That's telling you there is a statistical outlier in progress. That means you're going to have a second standard deviation move or more. You're going to have a 95.4% move, right? So when you see an outlier like this starting, got power, it's all to the downside. Price action all to the downside. So immediately is what I want to do, show you what I'm talking about. Let's turn off the UPN. Let's put on the PB2. Let me get my little cute little measurement tool there. Boop. 15 bars, huh? Okay, bar master. Not only did it have a second standard deviation move, or this is the 95 for Laplace distribution range. It's the same probability level as normal distribution. It's just a little wider. And the third standard deviation normal distribution is a lot tighter than the Laplace 99.7. Normal distribution third standard deviation is 99.7 as well. So you can see on this move, on the 4 hour, there was literally a 0.03% chance these candles would close outside this line. All right, this is why we trade like this. This is why when everybody else has no idea what's going on in the market and they think we're going to just continue dumping or continue pumping, people are buying tops and selling bottoms because they don't understand the distribution. You are not shorting Bitcoin here, right? Did this pay off? Yeah. Well, the next 4 hour candle, that projection continued down more. But right here, and so if I'm trading low time frames, I had a lot of good 5-minute trades to the downside on this 4 hour on all 3 4 hour candles. But when I'm looking at this, as soon as I see this pull back up and close right here, 2 in a row, I'm like, okay, party time's over to the downside. I need to reevaluate where am I going to put risk on? I'm all about risk, right? And people know that if I have a bias going into intraday trading day and it's to the top side, I'm very rarely going to counter trade scalps to the downside if my bias is to the top side. And if I do, I'm only going to use a quarter of my account, where if I'm taking longs that day and my bias is to the top side, that's where all my risk is. Say I'm trading with 5 Bitcoin, I am using all 5 Bitcoin on every 5-minute scalp to the top side because that's where my bias is, right? You want to put your risk on where the probabilities are going that direction from what I'm reading on the charts. And if I do make a counter trend trade, I'm only going to use maybe 1 or 2 of those Bitcoins. Talk about limiting risk. Think about what you're doing, right? You're maximizing your gains because you have a bias. But if you do counter trend trade that, because when you get in the groove, you can do that. You'll really start to see these charts. Not only are you prepared that if that price action drops below your entry on that short, right? Because you're counter trading that bias to the top side, that you're just getting out of the trade immediately. You're barely going to take a loss. You're barely going to take a loss. And if it is a winning trade, hey, you got a little bit of juice, right? It's not like when you were putting all your risk on, but hey, you got a little bit of profit in the trade. But that's what I'm all about. It's like if I'm counter trading my bias because there's an obvious trade that way, I'm not using my whole account, right? And I got my finger on the market sell or market buy button. I'm going to get out of that trade so fast if that thing turns around on me. That is the main way to limit your losses in this market. So what do you have all these other YouTube guys teaching people? They're trying to teach people how to swing trade volatility. You do not swing trade volatility. You trade the low time frames because all that volatility is being created down there. The high frequency trading firms are just going bananas down on the 5-minute and lower charts. That's where they're at. That's where all the volatility, that's where all the profit taking's happening. People get lost and they get taught to trade a certain way, like, hey, we're going to swing trade this, or even getting long-term trades. Hey, Just buy spot and go have a life. But if you want to learn how to trade the crypto markets or any markets in general, you need to be trading low time frame volatility, or you're going to be in the poorhouse at some point. There's just, it's too hard, especially with Bitcoin. That's the thing with leverage too. Leverage is for unvolatile markets like Forex. When you start using leverage and you're trading a highly volatile asset like Bitcoin, this is why people are getting liquidated left and right, because they don't know. They're brand new traders. A lot of the traders in crypto are younger and it's their first experience in the markets at all. And they are being led astray big time. All these YouTube jimmies are out there fucking on-ramping brand new traders onto leveraged exchanges, giving them tutorial videos how to use leverage. Meanwhile, that exchange is paying that YouTuber Bitcoins to on-ramp unsuspected new traders right into their system. And then you got the 90-90 rule in full effect. It's just insanity. That's what we're trying to do. We're trying to change up the game a little bit. Give people an opportunity to really learn how to read these markets. Not using traditional TA. They're all lagging indicators. It's all total bullshit. It's in our opinions, it is an industry-wide scam going on to just fleece retail traders of their funds. People are like, oh, you're crazy. I'm like, oh, really? Well, have you looked lately? Retail traders do nothing but get hammered nonstop. It's crazy. Most of the time because they're using leverage. Oh, well, what are we going to do? And we're out of time. Man, I rambled and ranted. It's all good. That's why I'm loved. Keep an eye on this market on the weekend. I'm telling you, man, I got a feeling. I've had a feeling the last couple weekends. I've been telling them, Jeb, like, you watch, one of these weekends, this thing's going to just go hammer style. It's going to rip some people's asses. It's just, there's so many people getting bored with the market. So many people getting bored. So, yeah, we'll be back on Monday, 5 p.m. Eastern Standard Time. I'll see you guys then. Later, boys.
Yes, yes.